Forsyth of Drumlin.
My Lords, I rise to introduce the Economic Affairs Finance Bill Subcommittee's report on the powers of HMRC. Perhaps I'll leave those who don't wish their tax affairs to be considered to leave the chamber. So we are considering the report from the committee, two reports, the powers of HMRC, treating taxpayers fairly, and making tax digital for VAT, treating small businesses fairly. These reports sprang from the subcommittee's inquiry into the 2018 draft finance bill. The subcommittee, as the House will know, exists to scrutinise the draft finance bill for issues of tax administration, clarification or simplification, and not the rates or instance of tax. And last year's draft finance bill did not contain many show-stopping measures, as members may have noticed when the final bill progressed through the House. We therefore decided to conduct thematic inquiries based on a few of its clauses, considering the cumulative effects of increased HMRC legislative powers over recent finance bills and checking progress on Making Tax Digital programme, which we considered in 2017. And an example of the cumulative powers which were perhaps unnoticed in the finance bill was that anyone who has overseas investments now can have their tax affairs backdated for 12 years rather than 4 or 6. And that includes an overseas property, or it includes perhaps having shares in a company listed on a US or other foreign exchange. And before explaining our conclusions, I would like to thank the subcommittee's members who were recruited at short notice for a fast-paced inquiry. I'd also like to thank our excellent special advisors for the inquiry, Elspeth Orcherton and Robina Dale, and the committee staff who produced the report, Sam Newhouse, Luke Hussey, Lucy Malloy and Lloyd Whittaker. Making Tax Digital for VAT obliges all businesses with incomes above £85,000 to submit their VAT returns through software that connects to HMRC's database. It came into force at the start of this month. It is the first part of the government's Making Tax Digital programme, which I will not go into detail on here, other than to say that it aims to make tax digital. And we first considered making tax digital in 2017, when it was due to be implemented for income tax in April of last year. We found that HMRC had underestimated the costs to businesses, overestimated the benefits to the Exchequer, and that many businesses had no idea they would soon be forced to change their whole accounting processes. And the subcommittee recommended that all mandation of the programme be delayed until April 2020 at the earliest. A year and a half later, we started our 2018 inquiry. The deadline had been moved back to April 2019, and income tax had been removed from the scope of the first stage. We hoped that by then, HMRC would have learned the lessons of our previous report, but we were disappointed. HMRC has again underestimated the cost to business. They say that on average there will be a one-off transition cost of £109 and an ongoing cost of £43 a year. But one practitioner told us that transition could cost clients transitioning from paper records as much as £2,600. There doesn't seem to have been an effort to calculate the cost for the smallest businesses, who will need more agent support and may be more likely to use paper records. The definition of small businesses used in HMRC's estimators include any business with taxable turnover between £85,000 and £10 million. This takes in 96% of VAT registered businesses. HMRC has still not done enough to raise awareness. The Institute for Chartered Accountants in England and Wales found in a survey as recently as last summer that 42% of businesses who are now required to comply with making tax digital for VAT were not aware of its existence. The Treasury announced triumphantly last month that as of December, over 80% of businesses in scope had started to prepare. But the fact that nearly 1 in 5 businesses had not started to prepare just 3 months before the introduction of making tax digital should have been more worrying. In its own research, the Daily Telegraph reported on the 30th of March a survey of some 500 companies that 23% of affected companies have not even heard of making tax digital, and an additional 28% had heard of it but did not know how it would affect their business. It seems likely that these businesses are the same small businesses that HMRC also forgot about in calculating the costs of their programme. There remain serious questions about the expected benefits of the wider Making Tax Digital programme. HMRC and the Treasury expected to yield higher tax revenue as businesses make fewer errors filling in their tax returns. But this doesn't seem to account for the fact that mistakes can run in both directions. Businesses could be paying too much as well as too little. And there is no convincing explanation of how businesses in rural areas and other areas where broadband connections are insufficiently good for this purpose, how they are meant to cope. We recommended that making tax digital for VAT be delayed for a further year to address these problems. Clearly, that ship has now sailed. In the spring statement, the Chancellor reiterated that there would be no further mandation until after 2020. Our report recommended that no further mandation takes place until April 2022, to allow the Government to properly analyse and learn lessons from the implementation of making tax digital for VAT. Delaying until 2022 would also allow reassessment of the benefits of the programme and its costs to the smallest businesses. We also recommended the Government publish a revised long-term strategy for making tax digital, accounting for the recommendations of our reports and the experiences of the programme so far. And I would like to ask my noble friend, the noble Lord Young, whether he could give any further updates on these recommendations when he responds to this debate on behalf of the Government. Our inquiry also sought to ask whether, after a plethora of new HMRC powers to address tax evasions and avoidance in recent years, there remains a fair balance of power between HMRC and the taxpayer. We concluded that HMRC's powers have outpaced taxpayer safeguards and tipped the scales in HMRC's direction. And before I begin, I just must emphasise that the subcommittee wholly supports efforts to tackle tax evasion and avoidance, but those efforts should enhance, not diminish, fairness in the tax system. We found that several powers had been introduced with insufficient safeguards attached for taxpayers, particularly those on lower incomes or without agent representation. For example, accelerated payment notices require taxpayers to pay an amount of tax which HMRC thinks that the taxpayer has avoided up front, before any dispute about whether the taxpayer is actually liable to pay tax to HMRC is settled by the courts. Follower notices require a taxpayer to pay tax HMRC says the taxpayer has avoided by using a scheme which HMRC thinks is similar to one which has been challenged successfully in the courts. Taxpayers can't appeal these notices, only the underlying tax liability. And taxpayers who continue appealing a tax liability after receiving a follower notice and lose can face penalties of up to 50% of the tax liability added to their final bill. Both notices prioritise fast recovery of tax revenue over fairness for taxpayers and, in my view, are a tax on access to justice. The subcommittee was very grateful to the noble and learned Lord Judge, who was able to advise the subcommittee on its draft conclusions. He criticised these powers for making HMRC judge in its own cause and fettering access to justice. and I look forward to his contributions later in this debate. To consider the overall balance of HMRC's powers and taxpayer safeguards, we recommended a new collaborative review of powers between government and the tax profession, repeating an exercise so successfully conducted between 2005 and 2012 when Customs and Excise merged with the Inland Revenue. The government noted this recommendation in its response, and I hope that my noble friend Lord Young can offer more clarity in his response to this debate as to whether the government will consider a new powers review. In addition to legislative imbalance, we also had evidence of an aggressive and uncompromising culture of enforcement at HMRC. For example, witnesses told us that HMRC had presented voluntary requests for information as statutory requirements, made inappropriately harsh decisions on penalties, and alleged more serious conduct against taxpayers in order to access longer times for assessing tax. There is a sense, one witness told us, that HMRC is aiming to collect the maximum amount of tax rather than the right amount of tax. It may be that HMRC's declining resources have made it impossible for HMRC to satisfy demands to recoup higher amounts of tax revenue and treat taxpayers fairly. This is one area of government expenditure where increased expenditure does actually produce increased revenue. We recommend that consideration be given to the role of HMRC's adjudicator, who currently considers taxpayers' complaints about HMRC. She should, for example, proactively investigate the conduct of HMRC investigators in a manner of an inspectorate, or simply expand the types of taxpayers' complaints she can hear and strengthen her power to settle them. We also recommended a review of the case for an independent body to scrutinise the operations of HMRC. I now turn to the loan charge, which was the most distressing part of our committee's evidence taking. The new HMRC anti-avoidance measures, which came into force on the 5th of April 2019, introduced this anti-avoidance measure, colloquially known as the loan charge. This is an example of both phenomena I've already mentioned: disproportionate powers and an overtly aggressive culture. We received and continue to receive a huge amount of evidence, often very difficult to read, on the impact this was having on individuals. And there are already reports in the media of at least 6 suicides as a result of the implementation of the loan charge. The loan charge seeks to tackle a tax avoidance scheme called disguised remuneration, in which individuals, usually contractors, are paid in loans rather than income in order to avoid income tax and national insurance contributions, and on the understanding that those loans would never need to be repaid. The loan charge will classify any outstanding loans from these schemes from the 6th of April 1999 as taxable under income tax. For those who have been using these schemes for many years, this requires them to pay many years of income tax in one go, in one tax year. In going back to 1999, the loan charge is retrospective. There is a long-established principle in the tax system that taxpayers are entitled to certainty in their tax affairs. As such, HMRC cannot go back further than 6 years, except in cases of fraud. But this charge goes back 20 years. HMRC, this is because the loans received in 1999 are still outstanding. The tax therefore applies to the present loan balance, not the past loan income. But the problem with disguised remuneration schemes is that these are not really loans. They are income under another name, and HMRC's treatment of the loans as income in the loan charge is evidence that they agree. We therefore recommended that the charge be disapplied to any disguised remuneration which occurred in years which would otherwise have been closed to HMRC inquiry. Notwithstanding retrospection, we support HMRC in their attempts to address present and future disguised remuneration. It is clearly tax avoidance, but we've pleaded with them, with limited success, to consider the different types of individuals embroiled in these schemes. Unlike some tax avoidance schemes, this affected middle to lower income individuals rather than high income individuals with easy access to professional advice. They believed the promoters of these schemes, often their employers, when they were told they were legitimate, approved by QCs, and even by Hmrc themselves. They were perhaps naive, but they were not malicious. One witness told us about a social worker affected by the charge. I should note that before I continue that we cannot independently verify the facts of this particular case, but it is illustrative of many examples which we've received. She was made redundant by her local council, who then offered to re-employ her as a contractor as long as she used a particular scheme. Unknown to her, this was a disguised remuneration scheme. She was only made aware of this fact many years later when she was presented with a bill by Hmrc. Some might say she should have investigated further. But as the witness said, she is a social worker. She is not a tax expert. The loan charge unfairly assigns the same culpability to lower income individuals without easy access to professional tax advice as to better advised individuals who should have known better. Now, what is surprising about all of this is many of the schemes were promoted by employers with deep pockets, and we found no evidence that Hmrc was showing the same enthusiasm in pursuing either the employers or the promoters of the schemes. I should just like to finish by reflecting on the Treasury's engagement with our inquiry. We invited the Financial Secretary to the Treasury, Mel Stride, to give evidence. At first he said he was busy with the budget, so we delayed our inquiry in order to accommodate him. He declined to attend on two occasions, and he has since declined 2 further invitations to attend the Economic Affairs Committee itself. As rationale, the Treasury asserts a convention we do not recognise, claiming that the fact that no Treasury Minister has attended a subcommittee before represents a precedent. The Financial Secretary repeated this argument in the Financial Times on the 31st of March. This is a matter of coincidence, not convention. No such agreement was in place when the subcommittee was created in 2003. Its inquiries in the past have often been technical and uncontroversial and answerable entirely by Hmrc officials. But the gravity of the offence of the evidence we received in this inquiry required a ministerial response. When Hmrc and Treasury officials gave evidence, they could not answer several of our questions, quite understandably, because they were matters for ministers. Furthermore, 2 of these invitations were from the Economic Affairs Committee, which has a long history of hearing from Treasury ministers. The Chancellor gives evidence every year, and the Chief Secretary of the Treasury is likely to give evidence to us only next month. The Governor of the Bank of England attends every year. In future years, when the Finance Subcommittee considers issues that it believes merit a ministerial response, it will continue to invite ministers from the Treasury. And I hope that in future years we will be able to cooperate more constructively for the good of this House and for the Government. And I would be glad of any reassurance to that effect from the noble Lord Young when he responds on the Treasury's behalf. I beg to move.
The question is that this motion be agreed to.
Can I give my thanks to the noble Lord Forsyth and for the tremendous work he and his colleagues on the subcommittee have done in producing these 2 reports today. And can I say, I'm glad we're giving this discussion the time and the space that it deserves today, and not trying to rush it through as had been intended to earlier, when it was to have been a precursor to weighty and important debates on Brexit. Now, although I speak on small businesses for my party, I'm no expert on tax, as will soon become painfully apparent. But even I could understand the sensible conclusions the Making Tax Digital report draws, and I do hope that the Government will listen to the words of Lord Forsyth today. So I'm going to leave it to my noble friend, Lady Kramer, to tread the fine line between the concepts of deliberate and contrived tax avoidance and uninformed or naive decisions, and very importantly, the loan charge. We all agree, I hope, that everyone in this country should pay their fair share of tax. So, with the permission of the House, I'd like to address my remarks to the first report, Making Tax Digital for VAT. And although I don't know a whole lot about business tax either, I do know about the challenges which small businesses face in terms of ensuring that they fulfil Hmrc tax requirements, having had my own small businesses in the past. And I totally empathise with the hard-pressed entrepreneur who has to multitask many of the roles in an organisation themselves, often including in completing tax returns. Implementation of Making Tax Digital, MTD, takes time. Time which cannot then be devoted to running and developing the business. And it takes money. The Federation of Small Business, to whom I'm indebted for their input, found that, excluding the opportunity cost that I've just mentioned, putting MTD compliant software in place this year will cost a small firm an average of £564, not £109 as Hmrc estimated. And the bigger the firm, the greater the cost. MTD has the potential to improve the experience of tax compliance for small businesses, as well as facilitating the provision of business support, access to finance and tax credits. But introducing it with the deadline of the 1st of April, already gone, is disastrous because small businesses are simply not ready. So I welcome the Economic Affairs Committee report. Its recommendations seem to me highly sensible. Firstly, deferring the mandatory introduction of Making Tax Digital for VAT by at least a year, while encouraging businesses to join voluntarily. This would have enabled Hmrc to ensure a smooth transition as well as helping business. Given the state of readiness of small business to achieve compliance, I'm sorry that the government has not seen fit to accept this recommendation. The second recommendation was staging the transition in order to ensure that small businesses and Hmrc are ready. And I welcome the fact that the government has rowed back somewhat on their original intentions by only requiring compulsory implementation on VAT and for companies above the VAT threshold. And I also welcome the acceptance that sanctions will not be levied where companies can show they've been doing their best to comply. And the third recommendation, waiting until at least April 2022 to implement the next stage, will allow time for lessons to be learned. That seems to have been accepted. Now, the government may be rubbing its metaphorical hands at the anticipation of increased tax revenue, but only 1 in 10 small firms responding to the FSB believe that MTD will have a positive impact on tax reporting and financial management processes, with more than a third believing that it would have a negative effect. But I believe that despite these considerations, the key problem is small businesses are just not ready for this. Many small firms are still heavily reliant on offline accountancy methods and are not confident in their digital skills. Many live in areas without access to reliable broadband speeds. Perhaps the noble Lord the Minister will say how he expects small businesses to overcome this problem, which is of the government's making by insufficiently improving the digital infrastructure. 37% of small businesses use paper invoices, while nearly a third use paper receipts and bank statements to keep track of their finances. I can envisage the chaos that may at this moment be ensuing as paper-based small businesses attempt compliance. The fourth recommendation is to publish a plan for the long-term development of MTD, getting business to see the benefits as well as it being just tax compliance. I totally accept that productivity, efficiency and modernisation are great benefits, and I'm sure many small businesses already realise this, but these are not the companies that I worry about, my lords. These incentives and the long-term plan to promote them should have been sold to them before, to persuade reluctant bosses to adapt the measures with a vestige of enthusiasm, not be burying their heads in the sand as they are now. Hasn't the government put the cart before the horse somewhat? The FSB is calling for a full review of the rollout and a guarantee that it won't be forced on those below the VAT threshold until at least the end of this Parliament, although they may need to be careful what they wish for. That date may not be too far in the future, my lords.
My lords, it's a matter of great regret to me that because Brexit is such a dominant issue in our politics, I so often find myself in opposition to my noble friend Lord Forsyth. And therefore it's a great pleasure to me to be able to say how much I admire the way in which he has chaired our committee, the Economic Affairs Committee, and also the subcommittee. And the fruit of that chairmanship has, I think, been shown with the considerable amount of media attention that our reports receive. And they receive that not only because a certain amount of effort is put into obtaining the coverage, but because the reports deal authoritatively with matters of topical and widespread concern. And they do so in a detailed fashion that demands answers. The government, that is to say, on this occasion, Hmrc, has, I think, to a very large extent, responded in the same spirit. Certainly, I don't accept all the points by any means that the Hmrc make, and I'll come to that in a few moments. But I think that the quality of the response has actually been rather good. And that leads me to make a general remark. Inevitably, in inquiries of this kind and in debates of this kind, we focus on issues of concern and matters that have gone wrong, inevitably, and that's what we're for. But I feel that having been paying taxes now, one sort or another, for the last 60 years, that on the whole, I must say, I found the Inland Revenue and latterly Hmrc really quite reasonable to deal with. Obviously, well, certainly my affairs have been simple compared with those of many businesses. They've been simple compared with many small businesses. But in terms of my own relationship over many years, I must say I have not found Hmrc difficult to deal with, and on the whole, I found them reasonably sensible and understanding of problems that have arisen. It's invidious to compare one public-facing government department with another, because their functions are very different. But I think if one compares Hmrc's record with that of the various departments which at different times have had responsibility for social security, Hmrc emerges really rather well from any such comparison, and perhaps particularly at the moment. Now, turning to the two reports, my noble friend, Lord Forsyth, went through the reports and the details of the two reports, and there's no point in members of the committee following each of the points that he made. So I will confine myself to very few. I do agree with his strictures about the pace at which making tax digital is being introduced. And I feel here that this is an example of the problems which arise when those who work for very large organizations with a wealth of specialist expertise have difficulty in understanding the way in which those who have small businesses and don't have very much expertise at their disposal actually live. I remember many years ago now, I was chairman of the Civil Aviation Authority, which is a very fine body, but we dealt a great deal with small airlines as well as with large ones. And I do remember being very struck by how difficult some of the officials at HMRC found it to put themselves in the position of people running small businesses and the pressures which were on them. And I think here, in the case of making tax digital, we do have an example of that. Having said that, however, I would add that I think the government does have a responsibility to encourage the digitalization of the economy, and that the process of introducing taxes is one way in which it does it. So I do recognize that fact. Then, so far as the other proposals are concerned, I think that on treating taxpayers fairly, I applaud the government's acceptance of our view that HMRC should do more to publicise action against promoters of tax avoidance schemes. These schemes are promoted, of course, to boost the profits of the advisors, and sometimes they do so to the very, very great disadvantage of the clients of those firms who run into trouble later on. And I think the important thing here is to change the risk-reward ratio to make it clear to the promoters that they themselves are running great reputational risks in plugging schemes that are at the outer limits of what is permissible, or indeed go beyond what is permissible. By contrast, I greatly regret the government's rejection of our proposal that naming and shaming should be restricted to those who've actually broken the law, as distinct from those engaged in legal activities of which HMRC disapproves. I realise that naming and shaming is not done casually, that various steps have to be gone through before HMRC goes public in these matters. But it does seem to me that the practice of naming and shaming for people who have not actually done something which is illegal or has been demonstrated to be illegal is contrary to the basic principle of natural justice. I also think it's in line with the deeply objectionable current practice of using innuendo and denigration to generate accusations and to change behaviour. And I feel that this is not something in which a government department should participate. And it's dangerously close to the way in which the police and some others have behaved in the case of sexual allegations, the most extreme example of which is, of course, the Wiltshire police and Ted Heath. I also regret the out-of-hand rejection of the proposal to give the first-tier tribunal the power to conduct judicial review. I accept, as the HMRC says in their response, that the Ministry of Justice and the judiciary would need to be involved in reviewing the need for such a change and indeed the mechanism for such a change. But the terms of the rejection, the terms in which the rejection are couched, show no recognition at all of the reasons for the recommendation. And the reasons for the recommendation are, of course, to try to even up the balance between the small taxpayer on the one hand and the large government department on the other. And I think it would have been very helpful if rather more detail, rather more meat could have been given to the explanation of why this is such a bad idea. So, my Lords, I think that in general we must recognise that we're dealing with a government department that has, I think, a good record, and that what we're putting forward are proposals to improve that, and also proposals to try to ensure that those who work for very large government departments with all the expertise at their disposal show a greater understanding for the position of small businesses and individuals that lack those advantages.
Very good. My Lords, it's a pleasure to take part in this debate, and it allows me to place on record my admiration for my noble friend Lord Forsyth's insightful chairmanship of the Finance Bill Subcommittee, of which I had the honour to take part. And I fully support what my noble friend has said on the issue of the engagement of Treasury Ministers in the subcommittee. It is little short of disgraceful that ministers obstruct this House in holding the executive to account. And it is also extremely discourteous. And I hope that my noble friend the Minister will take back to the Treasury our extreme displeasure at the stance taken in this instance by the Financial Secretary. Our two reports deal with rather different things, but they have a unifying theme, that of fairness. Whether HMRC's powers treat taxpayers fairly, and whether the plans to make tax digital for VAT are fair on small businesses. Noble Lords may note that our reports are careful to refer to taxpayers. We do not use the language of customer, which is used throughout the government's responses, and indeed has been used by Hmrc and its predecessor bodies since the early 1990s, when it became fashionable for government departments to talk about their interactions with citizens using the language of customer service. I have never been convinced that customer language sits comfortably with organisations that have to enforce the law. Mere customer implies a consensual relationship, and HMRC's so-called customers have no choice whatsoever. The police and the courts do not talk about customers. HMRC's top objective, according to its plan, is to maximise revenues due and bear down on avoidance and evasion. This is not appropriately described in customer language. But turning to fairness, my Lords, there are two aspects to fairness: substantive fairness and procedural fairness. Procedural fairness is at the heart of much that is in our reports. That is what our call for more safeguards and access to justice for taxpayers, as set out in our HMRC Powers Review, was about. Sadly but predictably, the government have largely rejected our recommendations. Similarly, with our report on making tax digital, we called for the concerns about the readiness of smaller businesses to be reflected in further time before implementation, and for HMRC to do more to make it easier for small businesses. That too was rejected by the government. Procedural fairness should be the hallmark of our tax system, but it is not clear to me that the government share this ideal. But we also cover substantive fairness, in particular in relation to the loan charge legislation, which my noble friend Lord Forsyth explained. Substantive fairness is about how particular taxpayers or groups of taxpayers are treated in practice. The loan charge is a way of tackling tax avoidance, and I certainly acknowledge that the government are right to target that, including these disguised remuneration schemes. What is much harder to accept is how the government have tackled this. They've used retroactive legislation, taxing up to 20 years of income as if it were received in one lump sum on the 5th of April this year, and with scant regard for the impact on individual taxpayers. The loan charge can catch taxpayers in a wide variety of circumstances. Many, as we have heard, were on low incomes and were put into umbrella schemes which they almost certainly did not understand. They just wanted to earn an income to support their families, an aspiration that our party normally applauds. Others were more aware that they were involved in a tax scheme and made appropriate disclosures in their tax returns, and they took comfort from the lack of challenge from Hmrc over the years. It was strongly represented to the committee that many individuals had no idea that further tax could be due. They spent the money they received. They were not holding in reserve sums just in case a bill for 10 or 20 years of tax turned up. They believed they did not need to. They are now overwhelmed by the debts that they are told that they owe. It might well have been fair for Hmrc to have targeted the promoters of the schemes who profited from these unfortunate taxpayers, but many are out of reach and overseas, and Hmrc has instead targeted the little people. Now, my lords, I first raised whether this was fair for taxpayers last November when we debated the budget, and I specifically asked my noble friend Lord Bates, who was then the Minister before he went walkabout, to go back to the Treasury after the debate and determine for himself whether it was fair. My noble friend duly wrote to me after the debate. The only time that fairness that was mentioned in my noble friend's two-page letter was when he said the government believes it is unfair to the ordinary taxpayer to let anybody continue to benefit from contrived tax avoidance of this sort. So a question whether something is fair was answered by saying what is unfair. And this is a common Hmrc and government tactic. In the government's March report to the other place on the loan charge, they avoided saying what was fair for some taxpayers by inverting the argument into what might be unfair for the totality of other taxpayers. And that, my lords, misses the point that fairness has a dimension that is taxpayer-centric. The government's view seems to be that individual taxpayers can have no excuses for getting involved in schemes which avoid tax. My noble friend Lord Bates's letter to me stated, "It is an individual taxpayer's responsibility to ensure the accuracy of their tax return and to understand the consequences of their decisions." And that sounds like a simple proposition. But, my lords, it is not realistic. There have been many studies of financial literacy in the UK, and all of them point to shocking levels of lack of financial knowledge. Over 1/3 cannot work out the impact of inflation. 16% don't know what the balance is on their bank statement, and 40% can't apply a discount to a price. Let us not kid ourselves about the competence of taxpayers. And let me bring this back to whether taxpayers are customers. Regulators are increasingly concerned in how businesses treat vulnerable customers. And the Financial Conduct Authority claims that nearly 1/2 of the population is vulnerable in one or more ways at any one time. The FCA places responsibility on financial institutions to ensure that vulnerable customers are identified and are then dealt with in a way which reflects the vulnerability. The onus is not on the customer to be able to make the right decisions. Let me read to you what the government said in their March loan charge report. The government and Hmrc takes the well-being of customers very seriously. Hmrc's teams are trained to identify and help vulnerable customers, and where appropriate, refer them to organisations such as Samaritans in Mind. Let that sink in, my lords. The government's solution is to refer people to the Samaritans. I am clear that if a bank said that was their policy towards vulnerable customers, the FCA's response would be immediate enforcement action. My lords, the government's approach is particularly shocking against the background of the number of reported suicides referred to by noble friend Lord Forsyth. These are people who are said to have left unable to cope with the consequences of the loan charge legislation. HMRC has referred itself to the Independent Office for Police Conduct in respect of one such case, which is a start. But neither the government nor HMRC are facing up to the fact that the basic policy is not fair to some taxpayers, and no amounts of procedure, such as helplines or extended payment terms, will counter the harm that is being done. My Lords, I've spent a long time on the loan charge because it is something I feel strongly about in the way in which it demonstrates lack of fairness and being a blot on our tax system. But I also want to say just a few words about making tax digital. We all know that the future is digital and that digitisation has benefits for businesses and for government. But I believe it is wrong for government to mandate digital solutions until it is clear that the vast majority of taxpayers can comply with ease and with minimal additional cost. That clarity simply does not exist for all the reasons that we set out in our report on making tax digital. And we found that HMRC is alone in its confidence that all 1 million businesses will be ready for making tax digital in April 2019. My Lords, I looked at last month's copy of Economia, and I do not expect noble lords to know what Economia is because it is the house magazine of the Institute of Chartered Accountants, of which I am a member. Now, the latest survey they reported by the tax faculty of the Institute found that only 28% of chartered accountants, and this is only last month, believe that SMEs have a good awareness of making tax digital, and only 22% think that they are well prepared. That is far too many businesses to put at risk. The top two concerns were cost and administrative burden of the implementation, followed by a lack of guidance from HMRC, and that mirrors exactly the evidence that the subcommittee received. And the next concern, at nearly 20%, was fear of software and technological change. Our evidence was that small and simple businesses did not need digital records for their own purposes. It is being forced on them by a dogmatic approach in the Treasury and HMRC. So far, making tax digital has benefited only the accounting software industry and professional accountants. But we will find out over the next few months how much harm it does to the small businesses on which our economy depends. I look forward to my noble friend, the Minister's reply to this debate, and I hope that he does not merely repeat the Treasury's refusal to face the difficult issues in our reports.
My Lords, it is very good that we have an opportunity today to debate the two excellent reports produced by the Economic Affairs Committee under the chairmanship of my noble friend Lord Forsyth of Drum Lane, and I congratulate my noble friend both on the subcommittee's reports and on securing this debate today. Your Lordship's House is rightly well regarded in its role as champion of the ordinary person against the powerful. In matters concerning tax, against the background of changes that have increased the powers of HMRC, it is most important that it continue to hold the government to account in discharging this role. It used to be the case that there was a clear difference between tax evasion and tax avoidance. Tax evasion was illegal, and accountants and other professional advisors would give clear advice if their clients were considering evading tax that was properly due. On the other hand, to avoid paying tax which the law did not require a taxpayer to pay was a perfectly legitimate, indeed responsible way to conduct a business. Indeed, the manager of a business who unnecessarily paid more tax than he was legally liable to pay could be accused of wrongfully disadvantaging the owners of the business. I would ask my noble friend the Minister if he would ask HMRC to look again at its definitions of tax avoidance. Its definition of tax evasion is clear enough. But HMRC states that the hitherto acceptable behaviour of tax avoidance involves bending the rules of the tax system to gain a tax advantage that Parliament never intended. It adds that tax avoidance involves operating within the letter but not the spirit of the law. But, my lords, who are HMRC to opine exactly what Parliament intended? How do they know? Do they not have a conflict of interest? If a taxpayer operates within the letter of the law, it is very hard to condemn his behaviour. If HMRC considers that Parliament had intended that such behaviour should not be permitted, then the government should ask Parliament to change the law. There should not be any room for the subjective judgment of HMRC on the supposed failure to comply with the spirit of the law on the part of a taxpayer. Concerning the proposed new powers for HMRC, it is surprising that the government has proposed to treble the time limit for assessing income tax and capital gains tax from 4 years to 12 years. I think Victoria Todd of the Low Incomes Tax Reform Group is right in saying that the current timescales, 4 years normally, and 6 years where a taxpayer has failed to take reasonable care, are reasonable. Where there is deliberate non-compliant behaviour amounting to fraud, there is already a 20 years limit. For inheritance tax, the limit is 4 years. It is clear that significant extensions of the time limits as proposed will be very bad for the ordinary honest taxpayer for several reasons. First, the present limits make it incumbent on HMRC to look into all disputed cases relatively quickly. This means that taxpayers can more reasonably be expected to remember, or at least to discover, the facts relating to any tax-related queries. Secondly, if HMRC does not have to raise any queries with taxpayers for 12 years, it will significantly reduce the incentive for HMRC staff to do so. HMRC staff resources and systems mean that it is better able to discover facts in an efficient and timely manner several years down the road than the average small business owner or individual taxpayer. Therefore, the balance of powers are stacked more in HMRC's favour in the case of an inquiry into a tax event which took place 10 years ago than one which happened 2 years ago. Thirdly, the case for longer time limits where offshore matters are concerned, compared with onshore matters, is becoming weaker rather than stronger. The adoption of the Common Reporting Standard by more than 100 countries has led to the current situation where HMRC is receiving an unprecedented amount of information from many overseas tax authorities, as Keith Gordon of Temple Tax Chambers informed the committee. The government's response to the committee's recommendation that it should start a fresh dialogue with representatives of tax professionals is disappointing. HMRC does, of course, have dialogue with such representatives, but it does not need to listen to their concerns, and regrettably seems not to have done so in this instance. On the question of the removal of the safeguard provided by the tax tribunal's oversight of HMRC's attempts to obtain information from third parties, I would like to ask the Minister to explain what is the rationale for this, especially when the government has not yet completed its consideration of the responses to its public consultation on this subject last year. On the question of the loan charge and disguised remuneration schemes, such as those involving the use of employee benefit trusts, the committee considers that they are an example of unacceptable tax avoidance. I would prefer them to be considered as tax evasion because of the difficulty in drawing a line between acceptable and unacceptable tax avoidance. A loan that is not intended to be paid back and where the recipient of the loan is told that he or she will never have to pay it back is quite simply not a loan at all. Furthermore, I don't think all individuals using these schemes must accept any significant degree of culpability for placing an unfair burden on other taxpayers. Whether the employee was a care worker or an investment banker, the responsibility for a part of their remuneration to be made through such a scheme rested entirely with the employer, and in most cases the employee had absolutely no influence over this question. It is especially regrettable that the government has rejected the committee's recommendation to exempt from the loan charge those loans made in years when taxpayers disclosed their participation in these schemes to Hmrc, or which would otherwise have been closed. I look forward to the Minister's comment on this point. The committee has rightly focused on Hmrc's changing culture. In common with my noble friend Lady Noakes, I agree with the committee's policy to refer to individuals as taxpayers and not as customers. Hmrc's recent decision to start referring to taxpayers as customers is very irritating, even more irritating than the fact that London Underground and train operating companies no longer refer to passengers. I find it condescending that Hmrc would refer to a taxpayer as a customer. The taxpayer does not have a choice as to whether to offer his custom to Hmrc or not. The government's partial acceptance of the committee's recommendations in this area seem a little bit reluctant and grudging, although it is encouraging that it accepts the need to balance clamping down on tax avoidance and evasion with taxpayer protections. My Lords, if I may turn briefly to the committee's report on making tax digital for VAT, I entirely agree with the committee's recommendation that the date for introducing a mandatory digital VAT system for small businesses should have been deferred for at least 1 year. It is absolutely correct that most small businesses are not prepared for it, and many are still unaware of it or of how to respond. Many firms of accountants only contacted their clients about the changing requirements immediately before or even after the 1st of April. It is true that Hmrc invited small businesses to participate in webinars in February, but many recipients of this invitation may not have understood the urgency or even how to participate in a webinar. The Institute of Chartered Accountants and the Chartered Institute of Taxation are among those industry bodies that have supported the committee's recommendation that the mandatory date for digital VAT be deferred by at least 1 year. Many small businesses thought that VAT was already digital because you have had for some time to file it online anyway. It is disappointing that the government has not accepted this recommendation, although they have agreed not to pursue filing or record-keeping penalties where businesses are doing their best to comply with the law. But again, my Lords, do we really believe that Hmrc is in a position objectively to decide which businesses are doing their best and which are not? It is to be welcomed that the government has undertaken not to introduce the compulsory digitalisation of other taxes until Hmrc has had time to assess the evidence from the income tax pilots and from VAT. However, could the Minister explain why the government has rejected the recommendation to make no other taxes subject to compulsory digitalisation until 2020 at earliest? Surely it is not realistic to continue to maintain that it is possible that compulsory digitalisation may have been sufficiently tested and shown to work as early as next year, given that it will not even be enforced until September of this year, which means for the quarter ending on 31st December. It is disappointing also that the government has rejected the committee's sensible recommendation to update the impact assessment to reflect the evidence gathered in recent months. And I would ask the Minister if he would consider carefully whether it is wise to adopt such a cavalier approach on this question. Again, I congratulate the committee on 2 excellent reports and look forward to the contributions of other noble lords and the ministers winding up.
My Lords, I greatly miss Lord Bates, but I do understand why someone might want to walk a very long way to avoid having to answer this debate. It's a pleasure to see the noble Lord Young of Cookham in his place. I first bumped into Lord Young 58 years ago in Oxford High Street, or rather he bumped into me. He was, of course, on a bicycle, an enormously tall bicycle, of course, and he was, of course, moving very fast. I could have been very seriously injured, but I wasn't, and he was so nice about it that I think I ended up apologising to him. So, I've admired him ever since. I particularly admired the day when, I'm sure many in the House will remember, answering questions at that dispatch box a couple of years ago, he dutifully read out an appalling piece of unimaginative boilerplate defending an indefensibly insensitive misuse of executive power. I can't remember what it was about. And when the House objected and protested, was he taken aback? Not at all. He said that he had been reflecting over the weekend on how he would have, if still a constituency MP, how he would have advised a constituent complaining about being subjected to the treatment he had just described. And he had concluded that there was a way round the bureaucratic intransigence exposed by the question. He then spelt out for us what was the way round that he would have advised his constituent to take. The officials in the box could hardly complain because his first answer had been the one they had drafted for him. His second answer had been his own, sympathetic and human, and it's that side of him that I wish to appeal to today. He will by now have guessed that I want to talk about the loan charge. I was not a member of the Finance Bill subcommittee. I am, however, a member of the Select Committee, and so I am one of those who have received numerous, very distressing, disturbing letters from the public about the way the HMRC are handling some of these historic cases. Clearly, the few cases summarised at Appendix 5 in the report are merely the tip of a considerable iceberg. HMRC in evidence suggested that about 50,000 cases were being pursued. I have been very shocked by the government's casual and peremptory dismissal of some of the points made in the report, in the government response. I don't believe myself that the noble Lord Young of Cookham would have approved such a response, and I want to put three particular questions to him. Question one concerns retrospection and how to define it. The report states at paragraph 76 that the loan charge is retrospective in its effect. Some of the cases described in the appendix concern taxes now deemed due in respect of earnings in 2004 to 7, 2005 to 7, 2005 to 10, 2010 to 14. As I understand it, in none of these cases was there any warning or challenge while the individuals in question were using the scheme in question. Years later, they faced demands and talk of debt collectors and county court summonses, and I see from today's Financial Times the rather disturbing news that HMRC spent 26 million last year on private debt collectors, up from 6 million in 2014. I find that in this context a rather sinister number. The committee thought that this was unfair and recommended against retrospective action in respect of years past where taxpayers had all along disclosed their participation in a scheme now found to have created a loan charge. The government response rejects this and maintains that the charge is not retrospective And the reason it is not retrospective, according to page 4 of the government's response, is that it does not change the tax position of any previous year. Well, surely that's at best disingenuous and casuistical. It's true only in the sense that the catastrophic cumulative charge resulting from retrospection accrues and must be paid 100% in the current year. But it has accrued because of actions in the previous tax years, the years that would otherwise have been said to be closed. My question to the Minister is, would he have approved that definition of retrospection? It's at page 4 of the government's response. My strong hunch is that he would not. If he would not, will he ask his Treasury colleague, the Financial Secretary, Mr. Stride, to reconsider it? My second question concerns the committee's recommendation at paragraph 80 that HMRC urgently reviews all loan charge cases where the only remaining consideration is the individual's ability to pay. The government response, page 5 this time, rejects this too, chillingly adding that it only considers bankrupting individuals as a last resort. Well, that's reassuring, really. But as I read the response, only since 2009 were the promoters of the relevant schemes, some of which had by then been running for 10 years, only from 2009 have they been obliged to inform users of their schemes that HMRC approval is not certain. And only since November 2017, 18 years in, have HMRC started writing systematically to the individuals, the 50,000 individuals who might be affected by the loan charge. Now, I understand the reason for that. The legal position will only have become clear when the Supreme Court reached its ruling in its judgment in 2017. But surely, all along, HMRC should have been warning those who were using such schemes and signalling on their tax returns that they were using such schemes, warning them that HMRC clearance was not certain. There was legal uncertainty here. I worry that we seem to be pursuing these least able to pay, the little people, as the noble lady Baroness Noakes said, and it's a great pleasure for me, a rare pleasure, to be able to say I agree with everything the Baroness Noakes said. The Minister will recall Leona Helmsley, the New York hotelier, who famously said, "We don't pay taxes, taxes are for the little people." It earned her the title Queen of Mean. I don't see the noble Lord Young of Cookham as King of Mean somehow. We aren't talking Amazon here. We aren't talking Starbucks or Google or Facebook or rich people with tax advisors. We're talking about people like the social worker whose case Lord Forsyth of Drumlin mentioned in his speech. Now, we know that the noble Lord the Minister is humane. We know he went to a decent university. We know he'll be familiar with Act 4, Scene 1 in The Merchant of Venice. My question is, does he agree that it is right to show no mercy to individuals like Lord Forsyth's social worker? Does he not agree that some blame, does he not agree with Lord Robotham and Baroness Noakes and me, that some blame must be ascribed to the Inland Revenue, to the HMRC, for lying low and saying nothing for so long, not putting people on notice? And is he, the noble Lord the Minister, is he with Portia or with Shylock? My third question concerns the relationship between this Parliament and the Executive. The Minister responsible for the HMRC is the Financial Secretary of the Treasury. In my Treasury days, he was a feisty, powerfully brilliant young individual who had absolutely no truck with civil service boilerplate from people like me, and who enjoyed nothing better than a good argument with a parliamentary committee. He is now Lord Lawson of Blaby. My question to the Minister is, does he believe that the current Financial Secretary, Mr Stride, is right to refuse to meet the Select Committee? Does he think Nigel Lawson would have done so, and would he himself have done so? I recall from my Treasury days the sensible rule that ministers do not have access to any individual's tax affairs. But I also recall that when there is prima facie evidence that a class of taxpayers, maybe in this case 50,000 strong, are being unfairly treated and seriously disadvantaged, with very serious consequences in some cases, the responsible minister surely needs to put that right or take responsibility for it. Hiding behind officials just won't do. I look forward to the Minister's answers to my 3 questions, and I hope they are indeed his answers.
My Lords, I must declare an interest. For a time in the late 1970s, I was standing counsel to the Inland Revenue on my old circuit, and I'm sorry that I'm going to be critical of those who once fed me. I declare a second interest, which we all have. I believe that tax liabilities should be paid. That's not merely a moral view. Every time somebody fails to pay his or her tax, the rest of us who do pay our tax have to pay more. So I have an interest in this discussion beyond merely having been counsel to the Inland Revenue. And if I may, I just want to grapple with some very simple propositions. The liability to pay tax depends on legislation. Hooray! I'm right. Unless legislation provides liability to pay tax, there is no liability to pay it. Hooray! Self-evident. Tax legislation has become intensely complicated. Indeed, it's not unfair to say that tax legislation over the last 10 to 15 years has made understanding tax liabilities virtually impossible. The legislation is virtually unintelligible. No hooray about that. And sometimes, my Lords, no one, not Her Majesty's Revenue and Customs, not the taxpayer, not good, sensible accountants, not even wise judges, can be too certain about what the legislation actually provides. And we have to grasp those simple issues when we are considering this debate. For this reason, where the law is uncertain, one or other side, it may be the Hmrc, it may be the taxpayer, is entitled to go to a court and ask the court to glean what the legislation means and whether or not it establishes a tax liability. Of course, if there is, it must be paid. But if it does not, surely not. The principles are simple, provided we remember one long, well-established rule at common law, easily forgotten. We have the right to unimpeded access to a court. It is one of the essential principles on which the rule of law is founded. And note, I have emphasized unimpeded. This is not the time or the place, perhaps, to point out that what has been done in the last few years to the provision of legal aid has damaged that principle. But just because it's been damaged once, we really don't want to go on damaging it further. So I'm speaking today in relation to the powers of Hmrc paper, because that paper has identified a number of incursions into the right of unimpeded access. And I strongly support the recommendation in paragraph 134 that all powers granted to Hmrc since the conclusion of the Powers Review in 2012 should be evaluated and those evaluations published. And, I'm quoting again, all future powers should be evaluated after 5 years. I have found the government's response to this paper alarmingly negative, and the fact that the Minister has treated this committee with what, I'm being less courteous than Lord Carr, with what I regard as a contempt, with a contemptuous disregard for serious issues, has encouraged me to speak on my own behalf. So I want to take just one aspect of these various different matters. The general anti-abuse rule. What's that defining? The general anti-abuse rule. Using that language presupposes that a scheme intended to reduce tax liability by reliance on litigation constitutes an abuse. The description abuse assumes that the scheme is unlawful, or that if not unlawful, it should be treated as it is, even if it is not. Since when has it constituted an abuse for a citizen, rich or poor, to seek to rely on law laid down, indeed laid down annually, by Parliament? It's a very strange concept. Now, if where the legislation is uncertain a case is litigated, the courts may decide that the scheme is lawful, and if it does, no penalty can be imposed on the taxpayer for going to court. It would be an extraordinary proposition if it could. But what that successful taxpayer risked in going to court was not only the costs of losing the litigation, which is fair enough, but also the imposition of a huge financial penalty. Not tax, not back tax, not unpaid tax, not interest on tax, just a straight penalty. Indeed, that is precisely what is meant by the government response at page 9, that this regime provides the taxpayer, I'm paraphrasing it, with an opportunity to settle the dispute without the application of penalties. That is a pretty subtle threat, isn't it? Bedecked as it may seem to be as an inducement, it'll be in your interest to do as we tell you. And all this applies equally, as Lord Tugendhat was mentioning, to the provision for extending powers of naming and shaming. Fair enough, if you have done something shameful, if you have done something unlawful, if you have done something wrong. But unless you have, why should you be shamed? My lords, HMRC may be in a unique institution, within our country, but unique as it is not infallible. It is not always right. But if HMRC tells you that if you challenge our analysis of this problem and you lose, and we can pay you, as your accountants will advise you, a huge penalty, what's your reaction likely to be? It turns HMRC into judge in its own cause, into judge and jury. You can describe it in a lot of different ways, but what I am driving at is the threat, the risk, would undoubtedly deter you from going to court, from seeking the opinion and judgment of the court. And that is its purpose. My lords, that's rather alarming. That is an interference with access to justice. Can we imagine our reaction if any other government department or minister tried to obtain the power to impose a financial penalty on anyone who had the temerity to take it or him or her to court? We'd be horrified. Now, I understand, I know perfectly well as a matter of history, how many powers HMRC has been given over many, many years. But that does not justify any further extensions. So I quite understand the need to address protracted delays in dealing with avoidance cases. Of course, I understand that the court processes can be misused. They are sometimes. I can understand that on occasions the system is being simply played along with a totally unmeritorious misuse of the court processes to delay settlement of a clear tax liability. I understand all that. I wasn't prosecuting counsel to the Inland Revenue time enough not to know that it happens. But the provisions within the court processes themselves would address these problems, and would do so in a way which does not offend the access to justice principle. There could, for example, be a leave requirement. If the taxpayer wishes to take proceedings and the revenue says this is hopeless, he would need leave. There could be a conditional leave requirement. For example, okay, you can come to court if you like, but bring the tax into court, bring the costs into court. Of course, if you win, you'll get them back. But further, and perhaps more importantly, if the court concluded that the scheme was without merit and arguable, and indeed no more than abuse of court, why on earth should the court not be given power to declare that it is so? Then you can be named and shamed. There's a judgment that you have been abusing the court process. And there's a further power which could be considered, which is that in such a case, if the court had come to such a conclusion, it would be open to the court to impose a penalty for such misconduct by the taxpayer. And not only on the taxpayer's advisers and those who promoted what the court had found was an abusive scheme. Now, such a declaration, such a power, such processes would obviously be matters for Parliamentary Council. But, my Lords, I do venture to suggest that this would provide a surer foundation, consistent with the rule of law and unimpeded access to justice, for the imposition of a penalty through a judicial process rather than through an administrative decision by a department which objected to the citizen going to court. We really do need an evaluative review of the wide accretion of powers to Hmrc. And as I say, I repeat, I strongly support the recommendation in paragraph 134.
My Lords, what a brilliant debate. And I have to say I almost hesitate now to speak for fear of diluting, which has really been extraordinary. And I'm sure the Minister will have taken on board and take back to Hmrc and government when a unanimous voice comes from so many benches and with passion that this is not a party political issue. This is not an attempt of one faction to embarrass a government or make life difficult for Hmrc. This reflects a genuine, really sincere and deep concern by people who have looked at the powers and the way in which Hmrc is implementing programmes and feel that there is a real risk that it's undermining its own reputation, as well as the respect that collection of tax, frankly, has within the United Kingdom. And that relationship of respect, I think, is absolutely critical. That taxpayers genuinely believe that when they're asked to pay, it is on a fair basis, and that the treatment they get will be appropriate and fair. My Lords, I was privileged to be a member of the Finance Subcommittee, and I do want to thank Lord Forsyth. Extraordinary skilled chairmanship, and I know he does that every time, but it's not an easy thing to do, and I hope he won't mind if we all take this opportunity to say thank you to him for exercising that kind of wisdom and that kind of leadership. I'm also a member of the all-party parliamentary group on the loan charge, which started taking evidence essentially as the process in the subcommittee came to a close. So I will try and use some of the information that I have from participating in those hearings, and some of it, frankly, is quite shocking. If I turn very briefly to the report on making tax digital, we are in a situation where I suspect everybody would agree that over time making tax digital is entirely appropriate, and that starting with that is a reasonable way in which to do it. But it's a programme that must be implemented well and effectively, and that is not the experience that we saw when we took evidence from the subcommittee. I mean, it's absolutely clear that so many small businesses, my friend referred to the fact that nearly 20% of them who are impacted by this requirement have absolutely no idea. Many more have not been able to access relevant software. The costs, I would far rather go with the estimates from the Federation of Small Business than the rather silly numbers, frankly, that we heard from Hmrc, which seemed to suggest they were completely out of touch with the real world of software costs in the marketplace. And I would point out, in this particular situation, that Hmrc has given a delay to what it considers large and complex organisations, big businesses with a swathe of staff and several departments to take them through this process. It's the small firms that are being told they have to now report their tax through this new digital process. And we understand that there's going to be some sort of leeway for those who attempt but fail. But frankly, given Hmrc's ability to relate, or lack of ability to relate or communicate with small businesses, I'm not sure that many have had a great deal of faith in it. And I will say that communication with that particular group of people is unbelievably weak. And there really is no excuse, because Hmrc does know every small business which is liable to pay VAT. So it is in a position where it could communicate directly if it chose. And the answer that we frequently get, which is information was put up on the website on the Spotlight page, I think it's called, and that is considered to be communication, just makes absolutely no sense. And we heard from many people who were represented by accountants and specialists. My great fear, and I think that of the committee, is for the many people who didn't have that representation and who are completely in the dark. That, as I say, this ought to be a good programme. It should be on a voluntary basis. It should have all the time that it needs. And poor implementation really undermines what could be a long-term programme of significance. But I really want to focus much more on the Tax Powers report. And just say very briefly that I agree with all of those who have raised these extraordinary issues of the denial of rights to appeal, accelerated payment notices and follower notices to tax tribunals, and totally object to the disproportionate penalties for appealing follow notices and GAR decisions. Justice is fundamental, and I wish Hmrc would understand that and take that on board. And I cannot understand extending the time limits for assessing offshore tax to 12 years. I mean, who in their right mind keeps records for 12 years, particularly when it's on a small property or a few shares? I mean, this is nonsensical. And Hmrc is merely making up for the fact that it has been lax in pursuing these particular cases where it thinks there is something that it ought to investigate. It shouldn't be throwing the burden of its own incompetence, I might say, onto the taxpayer. But mostly, I want to talk about the loan charge. And let me agree with all those who have said that it's the little people who get really no understanding from Hmrc. And I think, in a sense, Hmrc hasn't recognised that this is the pool of the people that it's dealing with when it comes to the loan charge. My lords, many of the people who ended up becoming self-employed did so because of outsourcing. In fact, if you look at the majority of employees, they worked once for local government, they worked for central government, they even worked for Hmrc, they worked for bodies like the BBC. They didn't seek to become self-employed. They were told the only way they could do this particular line of work was to become self-employed. And indeed, they were told that if you want to be recruited, this is the agency that we're using, you go to them, they will provide the advice to you and the mechanisms to allow you to become self-employed and continue with your job. And it goes all the way from the social worker through to the IT contractor. And I must say that Hmrc, which denies engagement in this process, is totally culpable. And on the all-party parliamentary group, we have heard from people who were consultants to Hmrc and who are now being faced with a loan charge. And perhaps it's a very good example because the particular individual that we got the most detail from was told that in order to work as a contractor for HMRC, that person had to go to a particular recruitment agency which had been retained by HMRC, presumably being supervised by HMRC, and provided the various options in order for that individual to structure themselves as self-employed.
I'm most grateful to the noble Baroness and very interested in what she says, because we did actually ask officials from HMRC, she may recall, whether or not any people who were involved with HMRC had been involved with the loan charge. And at first the question was not answered, and I think on the second or third occasion we were told that they were not aware of any evidence of this. So it might be useful to make that available to them so that we're not misled in the future.
I think the individual has made themselves aware to HMRC and happens to have an email trail, which makes the process rather easier to understand. But also, for many of these occasions, people weren't told you're going into a loan scheme. We're going into some form of disguised remuneration. They were told there are 2 or 3 ways in which you can structure yourself as self-employed. That the advantage of the scheme, and as I say, the word loan was rarely used, but of Scheme X, it always had a fancy name to it, is that the administration is quite simple. And for many of those people, it was not financially particularly advantageous because they paid a huge fee for the administration of that scheme, 18% being the standard charge. So add that to the taxes in which they were paid. They weren't taking home more. And they had every reason to think that they were working in an approved situation. Now, some people knew that one scheme was perhaps more tax advantage than another. Not everybody is in the same position. But virtually everyone that we talked to said, if I had any clue that HMRC was troubled by this, that of course I would have stepped away from it. And many of them, when they found out that HMRC was, did. And then were basically put into another scheme with similar characteristics. So we really do have a population here that did not understand what they were getting, did not intend, and I do think that intent is significantly important when you go after people for what effectively are their life savings. And my lords, although HMRC says that it understands vulnerable customers, I mean, there is plenty of evidence that people now have sold businesses, they've sold their homes, they've gone bankrupt, that families have split up because I'm afraid money can become very significant in shattering a family structure, particularly when somebody has to dissolve their whole pension pot in order to meet this very large bill that comes in over 1 year. And being told that it could be spread over 3 years is pretty meaningless. The number is so fantastically large. Many of the people who are on the receiving end of the loan charge are no longer employed and have no other way. I was horrified that some of the 70 individuals who submitted evidence to the APPG, some of them, I'm not sure how many, have actually been called by HMRC with messages left on their answer phones. It's been picked up by business partners and family members who had no idea that there was an issue that's at large, and we do need an answer from that from HMRC. And I was even more shocked that on the 24th of April, giving evidence to Treasury Select Committee, the Chancellor claimed that the Secretariat to the all-party parliamentary group is partly staffed by people who are promoters of loan charge schemes, which is absolutely not true, and I hope that that has been retracted by this point in time. Now, when I pulled these notes together, and the situation may be slightly different, only a single promoter of a loan charge scheme had been successfully prosecuted, and that is Hmrc, but on the grounds that it breached DOTAS rules, not because it sold the schemes to people. And indeed, it's been allowed to keep its 18% fees that were charged to users. Hmrc's penalty appears to be a requirement that they disclose the users' names to HMRC so that they can be pursued. And of the 6 promoters HMRC has been investigating, and 6 others, we hear that charges will not be pursued because they didn't breach DOTAS. Only the users of the schemes will be pursued. And as far as I know, no one has yet gone and asked the employers. And that, of course, would include ultimately HMRC, a beneficiary of this move to outsourcing and to self-employment that's under tax-advantaged pricing. I don't believe they've yet gone to local governments or to central government departments or to the various public bodies. I mean, surely, my lords, this is a real abuse, and I can understand that HMRC is under extraordinary pressure. But I do believe that at the decision-making level, people are so completely detached from those that they in a sense, on those whom they have impact. They have very little sense of the world of contracting and self-employment. They have very little understanding of how people made those decisions and what their, what their capacities and capabilities were, and they have very little understanding of what the impact of their decisions are. And with a body that is so responsible for implementation, I think it is absolutely key that that changes. So I totally, support the various recommendations in these two reports. They're incredibly powerful and they're incredibly important. But I hope that in addition to these, that the government will consider now a proper review, not a report, but a proper review of the loan charge, a minimum delay of 6 months in implementing. I know it's officially implemented, but that can always be delayed. And on making tax for digital, surely we could now initiate a delay for small businesses, look again, and make sure this is implemented properly and effectively. It could be a superb programme, and it shouldn't be undermined.
My lords, I welcome, of course, to his position the noble Lord Young replying to this debate. It's a somewhat challenging baptism that he has on this first debate that he's handled in his new position. Let me say, my lords, we all know the competence of the noble lord and the way in which he always wins considerable support from the House in the way in which he presents his arguments. But I must say, I can scarcely recall a debate in which every single contributor has identified real issues which the government ought to respond to, and palpably has failed to do so. And not minor issues, pettifogging details either, but fundamental questions about the way in which a government department should operate, and a response to a committee report should be presented. So the noble lord's got a great challenge before him, and I don't need to stress again all the points that have been made in this debate, because all of us who've attended, I've got strongly at the front of our minds key issues to which we expect the Minister to make response. The only figure that I think I like to bring to the attention of the debate, I don't know whether the noble lord would bring this in as part of his defence, but it is the case that the Inland Revenue, HMRC, is 15,000 fewer servants than it had in 2010. And now, my lords, of course, we can all see ways in which government departments can work more efficiently, and we all know the advantages with new technologies and so on. But a large number of that 15,000, my lords, was a straight reflection of a determination to create a smaller state and a smaller government and less cost upon the government. And this is the price that we are partially paying in these circumstances, because if there's one thing which stands out in the whole of this sorry saga, it's just how the Inland Revenue persisted with conduct which was already causing enormous consternation amongst the recipients, and as the report makes so clear, not amongst people who were adept at tax evasion, not amongst people who employed professionals to look after their tax affairs, but ordinary citizens applying for jobs in which the employers, the people or the agents who were working for the employers, took them on board, indicated that an advantageous form of employment, of payment for the employment, would in fact be via a loan. And that's why, of course, we've got so very many people who deserve the sympathy of each and every one of us in this House, and all of us concerned with government, that ordinary people now find themselves with charges made upon them, not the kind of thing that's easily disposed of by the more well-off people in society, but the multiples of their actual earning power each year now demanded as, in fact, tax which they owe. This is a parlous position, my Lord, and what has been identified in this debate, of course, is just how dismissive the government has been thus far of the issues. Let me make the obvious point. More than half. I could wait the noble lord, of course.
To the noble lord, of course, he is quite right about the substantial cuts in the resources available to Hmrc, and that has undoubtedly been a factor in their ability to deal with inquiries and to deal sensitively with people. But we have to accept that they are not to blame for implementing the loan charge, which was passed by Parliament, by the House of Commons. And this requires, to deal with this, requires a change in the law. Does the opposition support a change in the law?
The answer to that question is categorically yes, and in fact I was going to seek to develop that argument briefly. I don't need to know, because the noble lord, first of all, in his opening speech, he made quite clear what in fact was the main charge against the government and its response to the report thus far, and I utterly and totally endorse that position, and I'm very grateful to both the speech which he made today and the obvious way in which he led the committee in producing the high quality of these reports. But of course, one of the things which stands out from the reports is that government found a whole series of the recommendations quite unacceptable. On the digital taxation VAT report, 8 were accepted, 7 in part, and only 6 were rejected outright. But on the other report, of course, a majority of the recommendations were rejected. Now, the government ought to have a pretty strong case to respond to a body such as our significant committee on this matter, led by the noble Lord Forsyth. But it seems fairly obvious that the Minister has somehow shielded behind that perspective that only the House of Commons has got any authority with regard to the economy. And we all know the law. We all know why the House of Commons produces its Finance Act, and we in the House of Lords defer to the Finance Act as presented. But, my Lord, that's a little different from a committee examining the conduct of a government department. And for what I can see, on the whole, the government ministers, one, not being prepared to attend the committee, and secondly, has been really rather dismissive of many of its hugely significant recommendations. I must say during the debate as well, there were expressions made with which I had the greatest regard. I'm not talking about the last speech of Noble Lord Kerr, nor the speech of the Noble Lord Judge, who were both quite definitive in what they had to say, and I agreed with, of course, agreed with the judgments they reached. But there were other comments at times in the debate which strengthened my support for the committee. The Noble Lord Tugendhat indicated the difference between the way in which this part of taxation was being dealt with and the way in which welfare taxation, welfare support is often done so. My Lords, this is a tragedy of has gone over a number of years. But, my lords, so has welfare legislation, the great problems of the universal credit, my lord, in which people who are devoid of resources are being asked for weeks to wait upon them to get the due amounts of money to which they're entitled. I was very grateful to the noble Lord Tugendhat for bringing attention to that. And I did also like the Baroness Noakes on her criticism of that use of the word customer. I found it difficult, first of all, when the railway companies started to refer to as customers, not passengers, because they weren't very confident that actually we'd become passengers and go anywhere, but we were customers because we'd paid for the ticket. My lords, there's a lot about business in these terms which I think we ought to seek to correct through gentle persuasion of the way in which big organisations address us. But, my lords, one of the issues which comes out so strongly from the report is this estimation by the government of two things. One, we can see that the revenue is motivated, and government, by the fact that there could be considerable increases in resources through making tax digital. And I must say, we understand the argument in the opposition. We understand the argument and endorse the argument for making tax digital. But it's got to be introduced and developed in better ways than these reports actually identify. What is obviously clear is that the tax on those who are in the unfortunate position of being concerned with the loan charge, they earned salaries, they earned resources, tax is payable upon those resources. It's clearly the case that there's got to be care on how people are challenged to make these payments, because many with such limited resources themselves. But there's no doubt at all that the objective of Hmrc with regard to this position, of course, was to ensure that tax was legitimately paid for services, for pay which should be allocated to workers. And, my lords, of course, the 2017 court case made this absolutely clear, and therefore we're not in any way, shape or form castigating Hmrc for pursuing the issue in principle. What we're concerned is about the practice that is real. And in this debate, it's been quite clear that the government department has presented a position which the committee has identified with great force and accuracy, and we expect government ministers to take note of that situation. And we all have faith. Let me say, I greatly regret the loss of the noble Lord Young's immediate predecessor in the post, because although I clashed with Lord Bates on very many occasions, I never had the slightest doubt about the genuine attempt on his part to present his case accurately and effectively, and with the greatest concern for the rights of the House. I'm not so sure, my lords, that financial secretaries in the other place have shown much respect for this body, but I'm sure the noble Lord Young, in his response, will both seek to answer the very real questions asked in this debate, and also, of course, treat the committee on its excellent reports with the respect which is due to it.
My Lords, can I begin by thanking my noble friend Lord Forsyth for introducing this debate, and also for agreeing to reschedule it from its previous slot, which would have been at a less civilised hour. Can I also thank the Economic Affairs Committee Finance Bill Subcommittee for their two detailed reports, and all noble lords who have taken part in this exceptionally well-informed debate. I've read both the reports and the government's response, and I did so with particular interest as a former Financial Secretary to the Treasury with responsibility for HMRC 25 years ago, some 15 years after the noble Lord Lawson, who was referred to in our debate. While we debate these two reports together, they are very different. The one on powers is wide-ranging, hard-hitting, with some radical proposals, particularly those on which we've just heard from Lord Judge. And the other, on making tax digital, is more narrowly focused, more consensual, and concerned with the pace of travel, as mentioned by my noble friend Lord Tugendhat, rather than its direction. The current Financial Secretary carefully considered both documents, gave a detailed written response, and although he didn't agree with all the recommendations, he was happy to, in whole or in part, accept the majority, and we are still reflecting on the report. Can I say to the House, I take very seriously the comments that have been made by my right honourable friend, comments from my noble friend Baroness Noakes, from my noble friend Lord Forsyth, from Lord Kerr and others about his reluctance, his refusal to give evidence before the committee. My understanding is that the subcommittee's inquiry was focused on the finance bill, which is properly the preserve of the other place, and as such no Treasury Minister has appeared to give evidence to the subcommittee in the near 20 years of its existence. However, I do take on board the comments that have been made, and I do undertake to convey them to my right honourable friend to see whether, were a further invitation to be extended to him by the committee, whether he might reflect again on his decision not to appear. Before addressing the issues raised in the debate, can I join others, particularly the noble Lord Davis, in paying tribute to my noble friend and colleague Lord Bates, who stood down earlier this month from his position as a DFID Minister and Treasury spokesman. No one regrets his resignation more than I do, as part of his ministerial burden falls on my shoulders. He was an exceptional, dedicated and popular minister, covering government business on a wide range of topics, from overseas aid to the trade bill, from financial services onshoring to the performance of our economy, to name but a few. And for each he was able to bring intellectual clarity, a strong defence of the government's record, but also a listening ear. We all wish him well as he walks from Belfast to Brussels, raising funds for a cause that I know he is passionate about. Can I apologise, 58 years too late, for running into Lord Kerr on my bicycle in Oxford. Had I known that in 2019 he was to make a trenchant attack on a government policy I was obliged to defend, I would have navigated with much more diligence. And I thought I was in enough trouble when Lord Kerr sat down, and then Lord Judge got up. My Lords, I turn first to the question of HMRC's powers, which dominated our debate. I'm conscious I won't answer all the questions raised, but I will write to rectify that omission. The British people expect HMRC to take decisive action to tackle tax avoidance and evasion, and Parliament has voted to grant the Department a variety of powers which allow it to carry out this essential function. It is, of course, essential that there are safeguards in place for taxpayers, but the purpose of the powers is to allow HMRC to collect the tax we need to fund vital public services, a point made by Lord Judge. I note what the report says in paragraph 58 about scrutiny of the loan charge. But as someone who has taken a finance bill through the other place and sat on the committee stage of the finance bill in opposition, it's my experience that the other place is extremely wary about giving HMRC new powers over their constituents. And this particular legislation was taken through the parliamentary process with scrutiny in the House of Commons, following a public consultation on the policy and indeed on the draft legislation. And we've also set out, as my noble friend knows, a report published last month which sets out the rationale for and the impact of the charge on disguised remuneration loans.
My noble friend, allow me.
Of course.
Just on the subject of the scrutiny in the committee stage of the finance bill in the other place, I think I'm right in saying There was a speech from the Minister, a speech from the opposition, and 2 other speeches, and none of the issues about retrospection, etc., were raised. I think I'm also right in saying that in the other place, there's been an early day motion signed by many, many members, and several debates, including one in Westminster Hall, none of which has altered the government's response in any way.
Well, I'm sure that if my noble friend and I had been on the finance bill at the time, we might have raised some of the issues that he has now raised. But I just make the point again that the legislation did go through all stages in the other place after publication of the legislation in draft. I was grateful to what my noble friend Lord Tugendhat said about HMRC, some generous words which I know will be well received by the hard-working public servants in that department. I believe all governments in both houses are committed to striking the right balance between helping the compliant majority fulfil their obligations and providing appropriate support to customers who need extra assistance to get things right, while taking robust action against those who seek to avoid paying their fair share of taxes. And for this reason, the government welcomed the committee's detailed contribution to this important debate. Can I say to my noble friend, and also others who have taken part in this debate, that what I say will reflect the government's response to the reports, and indeed the updated response which we published in March. But I can say to the House that I will share with the Chancellor and with other ministers in the Treasury the tone of the debate, the very deep concern that has been expressed by members on all sides about some of the actions that are being taken, and again, without any commitment, see whether within the confines that I hope noble lords understand, there is any flexibility available to reflect the anxieties that I know so many lords have referred to. My lords, several noble lords spoke more specifically about the charge on disguised remuneration loans, and my noble friend Baroness Noakes made this the focal point of her speech. As acknowledged by the report, and I quote, "Disguised remuneration schemes are an example of unacceptable tax avoidance, which HMRC is right to pursue. All individuals using these schemes must accept some degree of culpability for placing an unfair burden on other taxpayers." End of quotes. It is the government's view, supported by a unanimous Supreme Court ruling, that these schemes are not and have never been effective, and that tax was always due. It is unfair to the vast majority of ordinary taxpayers who pay all of their taxes to let anyone benefit from contrived tax avoidance of this sort. And I'm sorry to disappoint the noble Lord Kerr in his first...
Because the Minister, who is doing his best, so because the Minister referred to the Supreme Court, he will be aware that that ruling focused on the culpability of employers. There was no expectation in any of those Supreme Court discussions that action would be taken against the ordinary user. And that has been indeed a source of a great deal of the fury around this particular issue.
With respect to the noble lady, the unanimous decision of the Supreme Court was that the tax was due, and the tax is payable by the employee and not the employer. I will come on to the employer in a moment. I was about to disappoint Lord Kerr, but in one of the questions he put to me, but if it was always the case that the tax was due, as I've just said, then it is not the case that the loan charge is retrospective, as he implied. And I'm not sure if he meant to imply this in his remarks, but it doesn't have to be paid in the current tax year. It becomes liable, but hopefully people will engage with HMRC and agree terms which may go over a longer period. The government is committed to tackling the promotion of...
I do apologise for interrupting my noble friend again, but there are 2 points here. The court proceedings which you referred to was, I believe, the Rangers case, which did say that liability lay with the employer. And the point that my noble friend Lord Kerr, I think, was making was that this is treated as if it was an emolument in 1 year, which means that the incidence of the tax is very much higher because it takes them over the top rate of tax. That's the point.
Well, my understanding is that the tax that is now due is the tax that has accrued over a period of time, and the tax was payable in the year in which it has accrued, and that has been consolidated and crystallised into the loan charge, but if I'm wrong, I will write to my noble friend. The government is committed to tackling the promotion of tax avoidance, and that is why HMRC has been investigating more than 100 promoters and others involved in marketing tax avoidance, including many who sold disguised remuneration arrangements. HMRC has recently won a legal case mentioned by the noble Baroness Lady Kramer over a contractor loan avoidance scheme promoter, Hmrc Resourcing Limited, and this will help collect over 40 million in unpaid taxes. My Lords, the charge on disguised remuneration loans has been criticised by those who say that it ought to be the employer who has to pay the tax that is outstanding. I agree. So let me be clear. HMRC will seek to collect the loan charge from employers in the first instance and will only pursue individuals for the tax due where it cannot reasonably do so from the employer. For example, if the employer is no longer in existence or is offshore. In those cases, HMRC seeks to collect the tax liability from the individual who benefited from the tax avoidance. By the end of 2018...
Since most of the employers in these cases were local government, that obviously would pay any bill that HMRC thought was appropriate. Central government departments, who would also pay, HMRC itself, that's collecting there ought to be quite simple, that's and various public bodies such as the BBC. Is he now giving a reassurance to all those who have received a loan charge demand but who were working for those public entities, that they at the very least will not be pursued because it's their employer who will be paying?
I think the safest thing I can do is to repeat what I just said. HMRC will seek to collect the loan charge from employers in the first instance and will only pursue individuals for the tax due where it cannot reasonably do so from the employer. For example, if the employer is no longer in existence or is offshore. Now, the BBC is still there and it is not offshore, and so are the other employers mentioned by the noble Baroness. So it is indeed the case that HMRC will seek reimbursement from them first before it seeks to collect the liability from the individual. By the end of 2018, about 85% of the yield in advance of the charge is from settlements from employers. Since the budget 2016 announcement, around 6,000 have agreed settlement, raising £1 billion for the Exchequer. These numbers will continue to increase as more settlements are agreed. The government recognises the impact of this legislation on the individuals affected and the importance of them receiving appropriate support. Some individuals are facing large tax bills, often as a result of using these schemes over a number of years, or receiving large sums through the schemes. That's why the best thing for anyone concerned about paying what they owe is to get in touch with HMRC, who are expanding its specialist service for customers with additional needs to help them meet their obligations. HMRC has a good track record of supporting customers to pay their tax debts and has made it clear it will not force anyone to sell their main home to pay their disguised remuneration debts. It doesn't want to make anyone bankrupt, and insolvency is only ever considered as a last resort, and few cases ever reach that stage. HMC are determined to work with individuals to reach manageable, sustainable payment plans wherever possible. My noble friend, Lord Forsyth, raised the question about suicides, and my noble friend, Paris Noakes, about these Samaritans. HMRC has been informed that a customer has taken their own life and that they had used DR schemes. Out of respect and given HMRC's duty of taxpayer confidentiality, the government is not in a position to comment further, but we do continue to improve support to vulnerable customers and will extend its valued needs-enhanced support service to customers undergoing compliance checks. HMRC works alongside the voluntary and community sector to improve its support and ensure that vulnerable customers receive adequate support beyond getting their tax affairs right.
To the Minister, that I don't want to keep stressing the issue of suicides, but in the one case that I am personally aware of, that is he aware that HMRC is now pursuing the heirs for the loan charge?
I
Raise that issue with
I wasn't aware. Of course, I understand the sensitivities of the issue, and I will indeed raise the matter with HMRC. HMRC has introduced simplified payment arrangements for those who approach them to settle by 5th of April this year, so that individuals won't have to pay the loan charge. Regardless of whether the individual decided to settle their taxes or whether the loan charge applies, for those who need more time to pay, there is no maximum period for payment. Can I turn to some of the issues raised during the debate about resources for HMRC? The government has always provided HMRC with the resources it needs, and at the 2015 spending review, the government invested 1.3 billion to transform HMRC to make it quicker and easier to deal with HMRC. In addition, since 2010, the government has invested 2 billion in HMRC to tackle avoidance and evasion. My noble friend Lord Forsyth raised the issue of the right of appeal on accelerated payment notices and follower notices. The rules do not affect, as my noble friend knows, a taxpayer's right to appeal against an HMRC decision or assessment concerning their tax liability, and if the taxpayer successfully appeals the actual liability, the follower notice penalties will no longer be due. And again, Parliament granted HMRC these powers in order to discourage tax avoidance. My noble friend also raised the question about retrospection. I think I've dealt with that, if not wholly to his satisfaction. It is a new charge on DR loan balances outstanding on April the 5th. It doesn't change the tax position of any previous year or the outcome of any open compliance checks. On the powers review, again, my noble friend asked what the position was. We agree that HMRC has to balance tax collection with important taxpayer safeguards. The powers review was a major project coming alongside the merger of HMRC and Customs and Excise. There hasn't been a similar fundamental change to justify such a review, but in response to what my noble friend has asked, we do keep the tax system under review, and we will consider options for reviewing and updating the tax administration framework to ensure that it is effective in modern tax administration. A number of noble lords raised the issue of low-paid employees, social workers, being affected by the loan charge. HMRC's analysis shows that around 3% of those individuals who used a disguised remuneration loan scheme worked in medical services and in teaching. On naming, an issue raised by my noble friend Lord Tugendhat, again, Parliament has legislated to allow taxpayers to be named in limited circumstances, and these are prescribed explicitly in legislation. And HMRC places significant importance on taxpayer confidentiality, and no one can be named for simply disagreeing with HMRC. And I hope HMRC never engages in what my noble friend called innuendo. On the question about HMRC inaction on loan charges, I may claim a little bit of injury time in view of the number of interventions. The government's view, as I think I have already said, is that these schemes never worked. Compliance activity has been taken ever since the schemes were first used, and this includes use of thousands of inquiries into scheme users and successful litigation and agreeing settlements. The loan charge was introduced to draw a line under all outstanding DR loans, but HMRC has always warned against the use of DR schemes, with the first spotlight being published in 2009. Many scheme users did not disclose details of their scheme use or disclosed partial information that did not enable compliance. This is in response to an issue raised by Lord Judge. Where DOTAS numbers were provided, HMRC routinely opened inquiries, and where individuals provided evidence that they fully and properly disclosed their use of a DOTAS scheme at the time, and HMRC closed an inquiry with that evidence, HMRC will look carefully at that case, but they don't believe there are many cases where that has happened. I'm conscious that I haven't said anything about making tax digital, and so I will just say a few final words about that report. We want every individual and business to develop the skills and confidence to seize the opportunities of digital technology, and in a world where businesses are already banking, paying bills and shopping online, it's important that the tax system keeps pace. Making tax digital gives UK businesses more control over their finances and allows them to manage their tax more easily so that they can focus on what they do best, innovating, expanding and creating jobs. The Enterprise Research Centre found in 2018 that for micro businesses, web-based accounting software delivered productivity increases of 11.8%. And I think one should set that against the costs mentioned by my noble friend Lord Forsyth and Baroness Burt. I was asked what the position was where small businesses were unable to go digital because of absence of broadband. Businesses that are unable to go digital will not be forced so to do. If it is not reasonably practical for a business to join MTD for reasons of age, disability, remoteness of location, which can affect broadband connection, they may qualify for an exemption. And my Lords, I'm deeply conscious I haven't done justice to the many serious questions that have been raised, and I'm already over time. Could I, in conclusion, thank noble Lords who have spoken for their contributions to this stimulating debate.
I'm quite sure the House would be very, very willing to extend considerable injury time to the noble Lord if he would be prepared to tell us not just what the boilerplate says, but what he actually thinks.
At the risk of getting myself into further trouble, I did say fairly early on in my remarks that I took very seriously the tone of the debate, the criticism that had been made of the implementation of the loan charge scheme. And I said that within the constraints, which I hope noble Lords understand that there is now legislation in place, within those constraints, I will see whether there is any flexibility which might address the very real concerns that have been raised by noble Lords. That goes way beyond my negotiating position. It is sort of without commitment to what anyone in the Treasury may do. But I do take seriously this debate and the points that have been made, the cases that have been raised. They were moving. I think the report has made some very strong points. And I do propose to raise with the Chancellor and ministerial colleagues the nature of this debate, the tone, and see within constraints that I'm sure everybody understands, we can go some way to meeting the issues that have been raised. And I hope I've been able to reassure your Lordships that we will continue to give very careful consideration to these very important matters.
My Lords, I think these last few remarks by my noble friend are extremely reassuring. I do think that my noble friend Lord Bates did give him a bit of a hospital pass when he... I mean, had the debate not been deferred, then it would have been answered by Lord Bates. And actually, his formal response is an example of why the committee felt that we needed to look rather more strategically and more fundamentally at the basis by which HMRC are held to account. That is not to say that the committee were critical of HMRC entirely. Some of the criticism arises from legislation which has been passed by Parliament. And a lot of the criticism, I think, if my noble friend had come at the invitation of the committee and had listened to the points, I think we would have made considerably more progress. We've had a fantastic debate. Brilliant speeches by Baroness Noakes, not just on the nomenclature of customers, but on the real issues here, which are illustrated by some of these problems. My noble friend Lord Tugendhat rightly pointed to the difficulties which HMRC have. One gets the impression that Mr. Osborne basically said to HMRC, I need the money, get it in, and at the same time cut the numbers, and therefore perhaps some corners have been cut to disadvantage. And Lord Trenchard, who pointed out the basic and fundamental conflict of interest that there is in HMRC, which is why the sort of issues which were pointed out in a very telling speech by a noble and learned Lord Judge. I mean, honestly, in this House, if Lord Judge says it's wrong, it usually is wrong. And I'm grateful that my noble friend has decided to discuss this with the Chancellor. And to my Lord Kerr, who is, I think we're going to lose from the committee, which is because of the turnover rule, who makes a fantastic contribution and who asked the 3 questions, which I hope my noble friend will be putting to the Chancellor. And to Baroness Kramer, who has been able to update this debate on the work which is being done by the all-party group on the loan charge. And it really is very worrying what has happened. Now, the path to hell is paved with good intentions. I have no doubt that the loan charge legislation was implemented with good intentions, but it has proved to be a path to hell for far too many people, not least those working in the public sector. And of course the BBC, which Baroness Kramer has mentioned, I read in the newspaper, we didn't get any evidence, but they are going to pick up the tab, it appears, for all their employees. One way or another, it seems this requires further work. To Lord Davis, who was right to highlight the pressures on the inland revenue, and I was really grateful for his commitment that the opposition would change the legislation if they got the chance, which may very well encourage colleagues to bring forward amendments at a later date in the other place. But most of all, I'm most grateful to my noble friend for the way in which he's answered what has been a very powerful debate and undertaken to take it back and discuss it with his colleagues. One of the things that we've changed on the Economic Affairs Committee is when we produce reports, is not just to move on to the next issue, but to come back to those reports and review what progress has been made. And I'm sure on the loan charge there will be further work, so we look forward to seeing what the government's response is. Most grateful. I beg to leave to withdraw the motion.
The question is that this motion be agreed to. As many of that opinion will say content. The contrary, not content. The contents have it.
Lord Forsyth of Drumlin.
I beg to move. Sorry.
The question is that this motion be agreed to. As many of that opinion will say content. The contrary, not content. The contents have it.